Yo, what is good, guys? I hope you all had a fantastic weekend. I have a lot to show you guys in this video. I promise you it's valuable, so you're going to want to stick through the whole thing, and you'll see what I'm talking about, so make sure to show this video some love, give it a like and subscribe, and we're just going to get right into it. So, to start off, on Thursday's video, I was calling for that liquidity test between 410 and 409, as well as my pulse zone theory. I was looking for 411 either Friday or Monday, and we're just going to go back to that video and play a short clip where I was really, you can just see me explaining it in real time before it happens. So we're going to start off with that pulse zone theory, and then we're just going to go back to where that I explained that liquidity test, and you'll see. Go in the Discord so you can see this explanation of this, but this would be I pulse, P1, L2, Z2. So first, you see my explanations of this. But anyways, you break that to expect these rates of velocity in order to get to that, I guess, forecasted or measured target where that target range and the next pulse zone is. So that would be up here. Now, this is lining up for 411 for tomorrow. So that's that pulse zone theory played out exactly. I'm going to show you it, as well as that liquidity test, which I'm also going to show you, so you can really kind of understand how the supply and demand works in the market. Let me take this off so you can see the charts. Actually, I'm going to explain something quick. An area I think we need to test soon is 409, 410, 409. You can see this has not been tested much. We have not tested really the liquidity and what the buyers and sellers are going to do in this area. And you have. So now we're going to go into the charts, we're going to zoom in and see how all of that played out. I'm going to clean up the chart a little, but you're going to see how it all played out, and it's going to make sense. So of course, you know that macro trend line still being very respected here. So I really want to show you how that pulse zone theory played out. Once I find it, give me a second here. PULRS, here it is. So I'm going to zoom in really close here. And in the video, I turned this upside down because sometimes you can see things when you chart things like to the opposite direction, and it kind of gives you a different perspective, which is, I also found a lot of other stuff by doing all this charting upside down. So you're really going to want to see what I have in this video, because it's all going to line up, it's going to all make sense, and it's really going to show you the bigger picture, so you can kind of see through the smoke and really just the emotions of kind of like the whole market right now. So it might be, I'll just leave it this way. So, you know, I was looking for that target at 411. We actually had a massive gap down, and we tested that area I was talking about for the liquidity. We tested between 410 and 409. So it all went pretty well, although I'm having an issue working with the gaps, like when things gap up or down within like phases in front of the next pulse zone. So it might sound really complicated. I been explaining it, trying to, in the Discord, so make sure to join that if you want to understand this stuff, because so far this thing really has not missed. So I'll include this in some of my videos, but it's more going to be kind of for the Discord. But regardless, you know, everything went as expected except for that enormous gap down, which kind of like messed up what I was expecting, but it still played out, just not in the way I was thinking it would. So what I think we are in right now is a very big rising wedge, and I'm going to show you a video. You know, I showed you how to measure it out. Watch these examples, because all the way back here I was expecting this would happen, and what you should be doing and thinking where we are right now 1 or 2 months ago. So this is the wedge that I think we are in, and I found this by doing a lot of charting upside down. I'm going to show you that quick so you can kind of see where all of my kind of like thoughts were coming from. But yeah, this is it. So now, although it's missing like a lot of touch points up here, I'm going to flip it upside down and you might see what I see. But this thing is looking for a reversal, and it needs to test liquidity for this to be able to hold up and go higher. And I'm going to show you this demand zone that I think it literally has to go to. I'm not a financial advisor, so what do I know? But in my opinion, I really think that we actually might, like, literally need to go here. So, right down to here, this is a very big demand zone. You can see there's a really high concentration of volume right here, and I think we really do have to go there. And it also lines up with some long-term resistances and supports here, which it's all lining up for this area. And I'm gonna go back to a past video where I was talking about this breakout, and just watch it. So yeah, this is the first one, and then you'll see. Mark my words, there is a bounce that is extremely imminent. Likely we see it this week, which I said in my previous videos. You can go back and watch them. I said I think we're gonna bounce around that Fed meeting. You know, you had 3.5 trillion in options expiring, and once all of these positions get repositioned, you're gonna see the sentiment change. And if we get this big move, you're gonna want to be cautious, because you're gonna see all these people like, oh my God, the crash is over, we're done falling. You know, they're just gonna be in this euphoria. So this was a month ago, when we were at 365 where I bought, and this is me explaining, once this move happens, the sentiment is going to change, and you're going to want to be cautious at this level, because everyone is kind of somewhat lost. And I'm going to show you another thing. This is also, you can just see from my thumbnails, I was like, it's over, the drop is over, fear is priced in, bear trap, the dip before the rip, the death of the shorts in the equity markets. I was very confident this would happen. The drop into the FOMC squeeze, this is another big one. Massive drop. That's a pretty big drop. We got these supports lower. We could make a new low, hit this. Yeah, massive drop. That's a pretty big drop, and I think it would have to happen before FOMC on the 14th and 15th, I believe. So. Okay, so now we're going to go back to the charts, and I'm going to show you what happened back here. And you can see how it all played out, and it all kind of made sense. Gotta flip this back up. So this was back here. We were in a rising wedge, and we were like somewhere here, but you know, I said I think we're going to come down and test this low. That's what happened, and I said that's probably going to happen before the Fed meeting. This was the Fed meeting. It happened one day after, or very soon after, but regardless, you know, I was calling for an extremely fast and violent drop, and that's what we got. Right out of this, right out of that rising wedge, bearish reversal pattern. So it is all still making perfect sense. It's just, you know, you really have to see through all of the emotions. And right now, I think we are in a very, very big rising wedge. You have divergences all over the place on the MACD and RSI, and I have my list, of course, which all the stuff I want to show you. So I showed you the videos I wanted to show you, how the pulse zone played out, the liquidity test, and I showed you that big kind of like the volume test, or the volume profile, which was the big demand zone I showed you, which was right around here, which lines up with this X, I guess, this intersection of very, very important supports and resistances. There is absolutely no way we do not test this line at some point, because I really genuinely think we have to test that area. And it seems like it would happen right around here. And funnily enough, you have quarter two GDP estimates right here on the 25th, so right where that intersection is. And where I got these lines from, you know, that top line from there and that bottom line from here, you have a huge demand zone here, you have a big support right here, if you can just look. So that really seems like an area you actually have to test, in the case that, you know, we did make our low at 365 or whatever that area was, and we continue higher, but we need to establish supports here and confirm them, because we cannot do this forever. And I'm also going to show you something with, it might look a little confusing at first, but I'll explain it. So let me get all these trend lines off. So I'm going to change the like candle types to a point and figure. And I'm not going to explain how this really works because I don't want to waste time on this, but anyways, we're going to zoom in a little, and this allows you to see supports, horizontal supports and resistances very clearly. And let me put up these lines. So actually I do think it was on the 30 minutes, so give me a second here. So would have been on the 1 hour. So yeah, here it is. You can, this completely excludes time as a factor. This has to do with just price action, and you can see when these ranges end, when these pull back, and each, I guess, O has a value of, like, let's just say $2. When it drops $2, it forms another one, and so on. But then when that trend ends and it falls back, 3 of these, I guess, let's just say O's in this scenario. So like right here, it retraces. I don't want to waste time explaining this, but this just stresses the supports and resistances, and you have an extremely strong resistance right here around 416. Now we haven't gotten there. I guess we did do it in pre-market on Thursday, Friday, but I think this is the big area. I don't think we can break this without getting a retrace. I mean, look at this. That is an enormous move. And I showed you all the data where the inflow is coming from, which was all retail. And I showed you insiders are starting to sell, which I also showed you. And we're going to take a look at what the dark pool sentiment is. So like what the market makers are thinking, what all the money is doing in there. You're going to want to see that as well, because that is really something nobody looks at. And you're just at this big area. You're at this wedge, which you actually may have already broken out from. But now I'm going to show you this, the cycle. We've been looking at this cycle for a while, and this thing has actually been taking a very long time, just because the momentum of this uptrend has been so incredibly strong. You haven't gotten that downwards pull, I guess, from these cycles, and so these are roughly 34-day cycles where I've explained this in my previous videos, where the cycle kind of has these rhythms that it follows, like, kind of like these sine waves up and down. And this is a rough range. There are plenty of ranges on the macro scale and even smaller, but this is one of the more significant ones where it really defines the highs and lows, where these get pulled down. It has half cycles, but you're getting into that range. Last week or the week before, I was really saying, I think we're going to see red, a big drop around August 8th to the 10th, I believe. And here you are. Tomorrow is the 8th. We have CPI this week. So, in my eyes, I really thought that CPI would be, or inflation would be peaking soon, at least for now. And I think CPI is the catalyst to drop the market again. Now, it's hard for me to say that I think CPI is going to be atrocious, just because, inflation's been taking off like crazy, and, I don't know, I've just thought that it's kind of been slowing down, or it's time to slow down for at least a little, but with all the stuff I'm seeing, I don't know how it's going to be good. So, CPI is a very big catalyst this week, and, it all lines up, but we're just going to have to see how that goes. And so yeah, that's it for the cycles, but CPI is coming up, and that is a big, big catalyst. So that's it for the point and figure chart, the cycles, which I showed you. And I showed you those profile zones, the demand zones, short-term wedge. So we're really going to zoom in here, so you can see what you need to be watching for the short term. You have to be watching these. This is stuff you need to be aware of, so that you can kind of like adapt to whatever moves and lines are getting broken. But short term, so here are the short term lines. We may be in a short term rising wedge, which would mean we go a little bit higher, but you'll see. So right here. So we may actually come and test this line, which I don't think it will, but you know, it might. But you've been respecting this support down here, and the big thing, I'm gonna take off some of these lines. We may be breaking out of a triangle. It's unlikely just because of how high and unsustainable this momentum is, but you're gonna see what I'm talking about. So give me a second to find which lines I'm trying to take off here. That one, and then I believe this top one. So A, B, C, D, E. The tricky thing here is that, so as you approach this line, we may be in this bullish triangle, which, you know, after the A, B, C, D, here I'll put it up. So A, B, C, D, E. After this E touch point, you break out to the upside, in most cases. So you're gonna really want to be watching this area. The next few days are very important. I don't think we can go higher. I mean, it's entirely possible. I have my short positions all set, but it doesn't seem like it. Put to call ratio has been plummeting, which always has a very high correlation to this momentum ending. So I'm going to show you this quick. Zoom out a little. You're going to see this is really, you can see the sentiment. Let me put this on a different scale so it doesn't move around like this. Okay, so put to call ratio. You can see this is a big inflow and outflow from retail. When it spikes, puts are being bought. When it drops, puts aren't being bought. They're all being sold. And this is retail just being absolute dumb money like they've always been. They short at the literal bottom every single time. They sold all of the puts. They weren't buying puts at the top. As we were falling, they start loading up on them, big drop, and they get squeezed out. It's just this cycle where retail is horrible at this stuff, and they buy the tops and sell the bottoms, or whatever that is. So they do it every single time. And what do you have here? It's plummeting right now. So from retail, history shows they are like always wrong, and they're all bullish right now, which is what I'm seeing. So this is supporting my bear thesis, and we're going to take a look at the dark pool sentiment, what all the money behind the scenes is doing. And I explained this in my last video. When we're just going to keep it simple. When this blue line goes down, the sentiment in the dark pools is going down, or it's bearish. And this is what happened last time we squeezed in March. This blue line, you know, you can read this quick. Pause that if you want, so you can read that. But so blue line going down. This is the sentiment in the dark pools going down, and the price falls very shortly after. Same with the GEX. This is really the volatility. The market makers are stabilizing the market. This is what they did up here. This is what they did up here. They're killing the implied volatility on all the options, trapping retail, selling all of their options, while they themselves get into the positions they want until a catalyst sparks the next big move. What the market makers are doing is they are literally preparing for the next gigantic move. And think to yourself, do you really think the next gigantic move is going to be up? Just think to yourself, what makes sense to you? No, we have already had the gigantic move. Look at that move. Just think to yourself, what makes sense to you? Yes, we're going up, but is this sustainable? No, it's not sustainable. And for the first time in a very long time, I've been seeing sell signals on the daily. The last time I've seen that was in January. And, you know, we are going to see a big drop here. A massive drop. And it's only a matter of time. You can see this. We finally got this first blip of red after being green for quite a while. So you got all these divergences showing up on the 4 hour and down. MACD is about to cross. You have all of these sell signals here where this is just all squeezing retail, piling money. They're all going to lose it soon, like they always do. But just be patient. I'm not a financial advisor, so what do I know? But just be patient. This is going to take I don't think it's going to be much longer, honestly, but you just have to be patient. The next move is coming very soon. So here you are at that macro trend line. You overextended on everything. The squeeze is coming to an end. Insiders are selling. It's all lining up. And it's taken a couple weeks, but it's coming. And I'm also going to show you another thing. This Fib Circle, which, nobody really uses these as the kind of like a controversial method of technical analysis, but you're going to see how this is very relevant. You can experiment with this stuff on your own, but you can see these shifts in kind of the price action at these rings or levels. And this is the Fibonacci, how all this stuff really incorporates itself into the world and nature and like growth of organisms to the size of galaxies, and it plays a role in everything, and how your body parts are divided into the specific ratios that follow the Fibonacci sequence. And this has to do with this. I don't know the math. I don't know the formulas to construct this, but the point is you can see the shifts here. And right after this, right at the macro trend line actually, you're getting this breakdown here. So I'm telling you, there cannot be more reasons to not be bullish up here at these levels. The risk reward is not worth it, in my opinion. But everything is lining up. So I showed you those divergences, the short-term wedges. I've really showed you everything I want to show you. The last thing I'm going to show you is, well, actually I did show you that, but just kind of the stuff you can see from charting upside down. It shows you things that you cannot see. It shows you things that you kind of miss sometimes, from like resistances and supports, just because sometimes moves look more sustainable when the chart is upside up. But just look at this. You're doing this gigantic drop here. You're at this big support or resistance, but regardless, it's coming. I'm gonna stick with my word here. It's coming, and I give it, a week to till we see a shift here. I think I could totally be wrong. I've been looking for that upside on that macro wedge from last month. 2 months ago, I said we could see 430, but at this rate, we have not had pullbacks, and without a pullback, I don't think we can get up there. So that's just my opinion, but that's really all I have for SPY. I'm going to show you one more thing on XBI. I took a loss on this, but I really want to show you how my risk management went into this so you can learn from this. But, if you're in the Discord, we played LabU, Biotech. We were buying this stuff down here, and we wrote it up for over 50%, and we started shorting in this range here. And this was a very tricky spot. It took like a month for this thing to not drop. It broke these important supports. It broke through this volume gap, and everything was signaling for it to go down. But, there was a range it was in, and whichever way it was going to break out, it would be massive. And the second it broke out of this range, I had my stop loss at 85. Second it hit 85, I sold, and it just went on a monster run here. And I saved myself, I believe, almost 5 digits here, or 4 digits. 5 digits. But, the second it broke that, I had to mitigate my risk. I got out, and now I'm shorting again. Because what I'm seeing, you got this big supply zone right here. You have a big resistance here. You have 5 waves up. Now, this is a tricky spot if you know Elliott wave theory. It's kind of rare to see extended first waves, but even in the case that this is wave 3, it's almost going to its maximum target here. So the upside in all cases is not much higher, but I think you're going to get a big pullback here. But me personally, I don't think I want to stay in the short position for very long, because this has a lot of momentum and a lot of opportunity for the upside. So that's all I have for this video. I really hope you watch the whole thing through, because this is a lot of important information that you're going to want to be knowing for the next few weeks. especially this week and the week after. So that's where I'm going to leave this video. If you watch the whole thing through, show it some love, give it a like and subscribe, and make sure to join the Discord. We're still running that lifetime duel, so you're not going to want to miss out on that, and that's where I'm going to leave this video. So peace out, guys.